Good afternoon, everyone. Thank you so much for popping in for this week's market update. Filling in for Mr. Mortgage Mark 5 for himself. My name is Justin Wood. I'm a loan officer here on Mark's team, and just at least wanted to give you guys some insights on the latest market updates. So thank you for watching, and we're going to get started. So let's take a look at this week's market update. All right, guys. So, quick update for our weekly rates as we like to kick things off. Mortgage bonds have been pushing up just a little bit with the oil crisis going on overseas. They're still in the sixes, which is awesome. So, it's still a phenomenal time to be positioned. But as you can see, ticking up a little bit off that 5.99 target we had a few weeks ago. But we're confident they'll keep heading in the right direction. Now, as a result of those rate increases, we are seeing refinance demand jump down just a little bit. They were down 19% week over week. Not uncommon, right? As rates start to spike, people are less interested in refinances. But purchases, though, are still up 1% year over year. So the market is still moving in a positive direction. Now, existing home sales, they are showing a lot of signs of life. They're up actually 1.7% to an annual pace, and inventory has actually risen to about 1.29 million homes available. We are seeing median home prices reach about almost $400,000 nationally. But the good news is, especially for first-time home buyers, we are seeing affordability improve for the eighth straight month. So keep that up, and you may be in a home soon if you are a first-time home buyer. Now, as far as home sales, we did see a small rebound, and I just love this little chart here. As far as the, thank you for the NAR for providing this, but pending home sales rose 1.8% month over month. They're still down 0.8% year over year, which isn't too much of a change. So it's steady at the end of the day. And Midwest is actually leading the gains with 4.6%. And the Northeast has lagged at 12.1% yearly in the decline. So again, pretty neat chart here with February pending home sales coming into the next report. Now, buyers following through on home purchases. This is a fascinating chart we got from Realtor.com. We're seeing a sharp decline in contract cancellations to the tune of 7.2% nationwide in February. And this is actually the lowest cancellation rate was New York City at 2.7%. So as a result of this, we're seeing buyers when they do go under contract, they're truly loving the home and they're not as likely to cancel the transaction mid-process. So that's a great sign if you're a seller, knowing that your buyer hopefully will keep moving forward with the purchase once they do go under contract. So we just thought that was a neat chart to show you guys for this week. Now, next, let's look at Americans on the move again. Now, we're seeing that almost 20% of buyers are actually looking outside their normal markets. So they are just wanting to get out of town and go somewhere different completely. Florida's still leading the pack with migration. It is slowing a little bit, and it's actually up from 17.9% last year. So people are still wanting to move somewhere else than where they currently live, and not just home, but also in their city and where they like to live and operate too. And leading the pack for folks leaving is LA, New York City, and the Bay Area, primarily just chasing more affordability, which we're no strangers to in this high inflation market, right? Now, I'm proud to say my great state of Texas is still in the top 10. So well done, Texas, as far as folks coming in here. Florida still leading the way, South Carolina, Arizona, Nevada coming in at 3 and 4. And then Idaho and Hawaii actually in the top 10 as well, as far as for folks moving there. So thought that was a neat stat as far as where are people actually moving. Now you know based on this chart. Now, the next part we're going to look at is cost of living pressures across the United States. And a whopping 50% of Americans struggle to pay basic bills on time, and credit card debt, 1.2 trillion with a T. Just wild when you think about those numbers and start adding up the zeros, right? And nearly 70% say their area they live in is no longer affordable, which is probably leaning a lot more towards why people are moving away from their current metro areas or living situations. And obviously, rising prices are driving more reliance on credit card debt overall. And next, we'll take a quick look at what that questionnaire that popped up saying which of the following statements are true. So obviously, 48% have plans to pay credit card debt down. I wouldn't imagine that nobody wants to pay that down unless you love paying, almost 30% interest. But unfortunately, a lot of folks do feel less confident in their ability to get out of credit card debt more than they did this time last year. So between the folks that plan to pay it down and are not confident about it, it's almost 65%, right, as far as the grand scheme of things. So now the second question on the part of it too is which of the following purchases is the biggest reason? Day-to-day expenses, 33%, retail purchases down to 10%, and some small other ventures in between. But guys, that is a massive amount of your personal expenditures going towards just credit card debt or credit card charges overall. So another good plug that if you are in a lot of credit card debt but have an extending interest rate on your current mortgage, let's take a look at that equity to see if there's a position to get you debt free and get you off of this chart completely. Now, product of the week, let's talk a little bit about, can I build a home with an FHA loan? The answer is yes. There are some requirements for FHA construction loans. We do offer the standard construction to permanent product as well, but you can in fact build with an FHA loan. So check out our blog here this week as far as for the products that we offer. And it's a really good opportunity to educate yourself before you make the dive onto getting a mortgage, whether it's a build or a purchase. We're happy to help on both. Now let's make it happen and have some fun. Take a look at this chart and see what 400 grand really gets you across the United States. So it buys 5,000 square feet in Detroit. Wow. If you want to build your dream home in Detroit for 400 grand, sign up. There you go. And then, but only 267 square feet in Manhattan. So obviously a mass difference too, as far as the affordability index as well. But the Midwest does dominate space for the price and what you can get with what you afford. And then coastal cities, just for fun, under 600 square feet. So point being, if you want a big house, probably target somewhere right around here. Maybe not so much over here on the East Coast or West Coast, but that's a pretty cool stat as far as the top 10 cities to show what you can get. And you got Lubbock coming in here too, in Memphis and all their kinds of pockets as well. So pretty cool stat when we're looking at that. Now, next, this shows just the concentration again for Dallas on that chart. So, yep. So back there, this was what $400,000 in Dallas will get you 1,500 square foot home. So pretty interesting. Meme of the week. So your fortune this week is complete the loan application. So what we mean by that is don't just talk about it, start through it, go through it, and then make sure you're fully educated on what you need to do. And there's your fortune of the week to complete the loan application. Thank you, Panda Express, for getting folks to do that as well. Now, I just want to share a really quick success story from our team. We just got this compliment on one of our Google reviews, which is outstanding. So humble brag for the group, but this is just part of the service that we offer. And as you can see, our clients are very happy for this as a result of that. So thanks a lot for the shout out, team. We do appreciate that. And finally, as always, want to close with getting social. Make sure you follow us on Instagram, Facebook, TikTok, YouTube, all the social things. You might enjoy a laugh or two along the way, especially if Mr. Pfeiffer, gets a wild idea in his tool belt. But they're always fun, always enjoyable, and you might even catch some good mortgage knowledge as a result of that. So as always, guys, thank you so much for stopping by. And then please have a great day. Take care, stay safe, and tune in next week.